Welcome back to another episode of the XRP Podcast. We are going to get into some very cool things today, and that, of course, is market correction or not. Where is the Fed today? And, of course, all of the impact that we will see on a macro level coming out of China. And I'm going to be doing all of that with, of course, one of your favorites out there, and that'll be Zach Rector. He's going to be joining us today. You do not want to miss this one, guys. If you are paying attention in the market, this is the podcast to listen into. And of course, if you are not doing this right now, and that, of course, is subscribing and liking this video, because what we're about to unload on you is going to be unbelievable knowledge, hopefully, and some insights to where XRP, the Ripple community, and all of that is going. So always love to get your feedback. Leave some comments down below. I read all of your comments. Thank you very much for the great comments. When you have somebody that you want to have on the show, drop them in the comments as well. You can do that. Very easy. I go through them. Our team does a full analysis of them, usually 2 or 3 days after a show, so we get all of them in there. So do that, and of course, we will respond. I want to thank our sponsor today, and that is Uphold, where you guys can earn crypto better. A lot of things happening with Uphold staking rewards, so you can stake up to 20 different cryptocurrencies and get into the reward side of things. New tokens, early access, along with full transparency. This is one of the best platforms out there to make trades on when it comes to crypto. The other thing you guys should be doing is this right here. Get the card, the XRP rewards card, which comes in the form of an Uphold debit card. And the nice thing about this, guys, is you can do this without a credit check. Also get up to 6% back on all your purchases for the first 3 months. You can get up to 10% back with a direct deposit stacked in on this. So this is one of the best values out there when it comes to a debit card where you can get into your digital assets. Make sure and check out Uphold. Use the link down below. Let them know we sent you. Let's bring in, of course, Mr. Zach Rector, coming in hot. How are you, Zach?
Thanks, Paul. It's always a pleasure to be on your show here, and exciting times in the markets. Great opportunities for us to take advantage of.
What a roller coaster we have been on, man. I mean, it's been nuts. Everybody I'm getting, you know that the market is hot when you have boomers texting you, is now the time to buy? Is now the time to buy?
Yep.
I love it too. But, you know, the point behind it, of course, I look at is the bigger narrative that everybody is watching right now, and that is going to be the macro pressures that we continue to see. I want to share one tweet with you real quick, and this one was a little bit, I think, is a bit alarming. I'll zoom in on that for you guys. There, of course, is Xi Jinping talking about China, and they're ordering all of their banks to reduce U.S. Treasury holdings. So we've known for quite some time that there is going to be pressure on the U.S. Treasuries. You know, we've talked about this with many people about the reverse carry trade with Japan, but one of the bigger holders of U.S. Treasuries has been China. And now you have Kevin Warsh starting to rearrange maybe a strategy here. How do you see this impacting the Fed's position right now, Zach?
Well, it's basically going to force the hand of the Fed to do what President Trump has been requesting them to do, which is to bring rates down.
Yeah.
And I think what you're referring to is now Warsh is throwing out the idea of a new Fed Treasury Accord, which would actually, potentially lead to the Fed buying as many treasuries as possible on the short duration to keep short-term rates down.
Yeah.
And they have to do this not only because China is dumping, many other countries are dumping. And they're dumping it at a pace that we haven't seen since the great financial crisis. And so they have to shore this up. At the same time, they also have to deal with the deficit in balance sheet and the national debt that's now over, 30 trillion in our unfunded liabilities, which is over 160 trillion. So they need rates to come down. And then we also need to shore up all of this selling off that we're seeing from China and other countries.
Well, one of the things that continue to hit, and I've talked to a variety of analysts over the last few weeks on this, is that there is a shift to gold. Many of these countries have started to do that. Obviously, this puts a lot of pressure, not only on the Fed, but it also puts a lot of pressure on clarity and the market structure bill and what that's going to look like. And I'll explain more about this because there is a bigger and broader impact on Ripple than I think a lot of people realize with clarity and market structure. I get tweeted at all the time, "Hey, Paul, don't worry about clarity. Ripple's not affected. XRP's not affected," when in reality, I think it's not affected, directly, but it has an opportunity loss that if it doesn't get passed, that Ripple could hit. So we'll get into all that. Right here's the CPI inflation. I mean, look at this. It's down at 0.68.
Yeah.
This is
Yeah.
crazy, Zach.
Yeah. Yeah. From where inflation was at back in 2021 and 22 to where we're at now, we definitely don't need to have rates as high as they are.
Yeah. Yeah.
Right. And so this is the terrible setup for the average, person that's working a job and trying to have some savings. And it's a stagflation, right? And inflation, although it's come down, is still aggregated and compounded over the past few years to where most people are struggling to even make it into the asset ownership class.
Mm-hmm.
But at the same time, you have to be there. Inflation, although it's cooled, it's not done. If we are really talking about the Fed Treasury Accord and a yield curve control program or something of that effect coming in, you don't own enough hard assets.
Yeah, exactly.
This is, like you said, gold. How does gold get to 10,000? This is it. How does silver get to 200 or 300?
Mm-hmm.
You got your answer. So for me and our community, I think that we're taking advantage of these opportunities on the pullback on not just precious metals, but also on our digital assets that are near the lows of this bear market, in my opinion.
Listen, I've been continuing to buy these ridiculous dips on a variety of digital assets, obviously XRP being one of the biggest ones after that pullback that we saw there on Thursday last week, and then just a literal retracement of that candle leveling off right now. And I think that was some of the things people are continuing to say, well, it's the pressure from clarity, the fact that we don't have it. This is one of the things. Once the clarity gets through, one of the biggest things that this is going to open up for Ripple is going to be market expansion. And I mean market expansion to something we have not seen before. And I'm talking about on-chain credit, FX settlement. You get into privacy and transparency, all of it, what we'll see in terms of growth, especially on the idea of where Ripple could be with their banking charter and aligning as a broader financial instrument here in the United States. So that's one of the reasons that we do need clarity. Now, are we willing to give up? And I say we, are our lawmakers willing to give up, the idea of yield on our stablecoins? Where do you stand on that right now? Are you pro going ahead or hold out for yield?
I put a lot of merit behind what Brad Garlinghouse says, and he's saying that we should move forward with the markup process. So I'm pretty much in agreement with that stance that we do need to move forward and work with what we have. There's one or two main issues here at hand, one of them being yield. Part of me just wants to see these politicians get on record to expose just how much they've been influenced by the banks in their position on this matter.
Bingo. Yeah.
And so I'd like to see that, but I think that it's really showing their hand, and it should make everybody bullish on the fundamentals. The fact that banks want to stop this is because they see it as an opportunity and a threat that if they don't capture, they're going to be missing out on trillions of dollars of demand for stable coins, like you were mentioning, FX, deposit tokens, all of it. And the problem with XRP Clarity now is that we're the only ones who have it, right?
Yeah.
Besides Bitcoin, maybe, and Ethereum, with an opinion from an SEC chairman. But when you want banks and institutions in the United States of America to start moving on chain, they just can't until we get this done.
Yeah.
And so I'm of the opinion that we need to get Clarity done as fast as possible so that we can unlock the U.S. market, which Brad Garlinghouse continues to reiterate that we're underestimating that value unlock of the biggest capital market in the world.
I totally agree. Now I agree in the sense of the unlock. Now, granted, I'm a proponent of, hey, don't take yield away anytime for Americans, but in the reality of things, I think what we're going to see in the way of vaults, DeFi, that's going to make up for it. Now, granted, a lot of people who are not in digital assets right now probably don't even know what that means. And that's the problem, is that there's a learning curve that's going to need to take place over the next few years that would at least give an opportunity to people to make yields on assets like that. And this is going to be assets other than just stablecoins. You're going to see this in all sorts of assets, including XRP. So that
yeah,
may be okay.
And we need ways to generate yield safely. I mean, this is as safe as it gets. These stablecoins are backed by treasuries. The treasuries are at 3-4%, and the stablecoin issuer hands you a portion of that. This is as straightforward as it gets.
Yep.
And if we don't get this, then it gets people resorting to offshore, shady ways to generate yield, whether it's in DeFi or centralized ways. And so it's just hurts the consumer. The excuse is pathetic. The small regional banks are already in trouble. This isn't, this is a slight threat to them. But what's stopping all of them from issuing their own stable coins and deposit tokens?
Right.
Right. And just like Brad Goinghouse said at Swell, the banks are scared of competition because they've done a crappy job of treating their customers, and they've been able to get away with it.
Yeah.
I was taken back by that comment, considering the fact of how many bankers were in the room at Ripple Swell, but
he doesn't
Brad Goinghouse laid it out for
pull
him.
any punches, that's for sure. Yeah.
Yeah.
Well, and to your point is that even though the banks aren't completely ready for this, I think they themselves understand that this is a train you just don't stop. Now, granted, do they get away with a little bit of a win on stable coins and fighting Coinbase? Coinbase can walk away as, kind of a company that said, hey, we tried really hard. But at the end of the day, I think the key here is going to be privacy, self-custody, DeFi, those kind of things that most of these banks for now don't even realize. I do get concerned that in the future we may get more regulation trying to change that. But right now, I think it's in a good position going forward. One thing that I do and am a bit worried about is this right here. And that, of course, was the story on Tether. Now, this is on Financial Times, by the way, guys. This is not a lightweight website. What do you do with all that money? This is Tether plotting global expansion. And there was a coin right down here. And he kind of stated this. He first of all, this is Paulo Ardonio. He's the CEO. We've had him on the show before. And he was in El Salvador, basically doing a talk. And he basically was talking about this dystopian idea. And then he went to this element that he calls the freedom tech stack. So it's finance, intelligence, and communication. And to me, this gets into very gray area. And I wonder, this again goes back to clarity, because if we get clarity in place, I think Ripple has a chance for RLUSD to become as dominant as USDC is here in the United States, which could dictate the world. What do you think?
Yeah, I agree. I said this a few years ago. If you really wanted to free the people, you would give them decentralized currency, decentralized media, and also decentralized voting confirmed by blockchain. Now, I think that there's a lot of people that have interest in not letting that happen, right? Or at least bringing it about in a way that they can control, hence them fighting so hard on stablecoin yield. Many folks like myself and others thought that Tether might have been the canary in the coal mine that brought us into the depths of this bear market. Not the case. And I got to give credit where credit's due. They've been taking that money, that profit, and buying more gold than many central banks, which has been quite ironic to see. And now they're rolling out USAT, that's the American Tether. They're going to come into compliance. I've said things about Tether in the past. Many people have as well, too. Looks like they're bringing everything where it needs to be. And to save the US dollar, we need as many private issuers of stable coins as possible.
Exactly.
And that's the thing that we've been saying over here in the crypto space is give us the level playing field. If RLUSD is going to be the biggest winner, it'll win on merit. If Tether's going to be the biggest winner, let it win on its own merit. And let the best technology win. Let the best entrepreneurs and capitalists win. And I think that the shift that we're seeing with the Clarity Act, with this current administration, they are bringing everybody to the table. We've seen these White House meetings and circles, right? They're bringing in industry players from crypto, industry players from banking. We had the most effective election, and Fairshake has a bunch more capital ready for the midterms this time around again. And I think that we need to get rid of anybody who's going to push CBDC on us, anybody who's going to stop us from getting yield, and anybody else who's going to get in the way of America becoming the crypto capital of the world. Does Tether need to be at the table? They probably do. And they've done quite a bit of work for expanding U.S. dollar dominance, right? By being the largest stablecoin, another U.S. derivative. So without Tether, and without RLUSD and all the other stablecoins, we don't have a chance. While China and others are dumping treasuries, stablecoins are going to help soak up that demand.
Definitely are a backstop. When you look at this is a thing that is perplexing to me, is when you look at the pushback we're seeing in DC right now from the banking lobby. Then you look at the position right now, which I'm surprised that we haven't had Trump come out and talk positively about stablecoin yield, because the advantage, first of all, it kills two birds with one stone. It addresses one of the affordability issues that this administration is facing. If he can say, listen, we're going to give you more money for your money, that's one big thing. But I think the bigger one is this, is if you get and can hold the stablecoin yield, the opportunity here is going to be big, because this could lure a lot of people into stablecoins to help raise that backstop against those U.S. treasuries that are being lost globally. So maybe Scott Betson is starting to pay attention to this.
And that helps to keep the yield down, which brings down your rates on mortgages and everything else, which is back. It's all back to that unaffordability problem that you just mentioned.
Yeah. Well, and it's one I think that we are going to be facing for a lot longer than people realize going forward too. I want to play a clip for you, Zach. This, of course, was Chris Giancarlo. He came on the podcast last week. Great guy. But let me play this for you guys real quick.
Well, if your audience takes away one message from this conversation we're having right now, and one message only, it is crypto is much more than some funky new alternative asset class. Mm-hmm. Crypto is an entirely new architecture of finance. It's a digital network architecture that's going to change everything we know about banking and finance and money itself. It's as important to finance as the 15th century movement from handwritten printing to movable type printing.
All right. So the future of finance, this coming from a former chair of the CFTC, mm-hmm. They understand this. I'm just surprised that we have not seen this just unleash across the entire Wall Street ecosystem, including banks. Maybe it is, and the banks just feel as though they have been kind of locked into, slowness in terms of innovation. Maybe because they never thought it would happen. It's possible.
And once they realized it was happening, they had to shore up their interest and get their ducks in a row before they could admit publicly that it is here, right? Yeah. And shout out to Christopher Giancarlo. I got his book right up there on my bookshelf right behind me.
Hey, he's got a new one out.
What's that?
A new book. He's dropping a new book.
Ooh, I better get that one. Yeah, okay. We need to elevate people like that to the highest positions, give them the biggest platforms, get them back on your show, keep on bringing Chris back, because these are the type of people that get it. And we have been speaking out about this, and now you can finally see it. And Ripple swell in November last year was a big one for me. My expectation was we were going to see the veil lifted. You're seeing that at Ripple swell. You're seeing that at the Ondo conference last week. A project that I'll just mention real quick is Canton Network. Mm-hmm. And they just came up seemingly out of nowhere, and they got all these institutions at the table. NASDAQ running a super validator on their network. And from Franklin Templeton to all the rest of them, they have started coming out now, and they're explaining zero knowledge proof better than I am. Shout out to Sandy Call, right? They're over the target, and what they revealed on stage is that they've been working on these things for the better part of a decade or more. Yeah. It's just now they're finally admitting it.
Well, I think the point is that it does, to Chris's point here, is that this is kind of a remap of the entire financial ecosystem. And you look at what Ripple is doing right now. I'll share this with everybody. Obviously they unveiled this last week, but their institutional DeFi roadmap is now looking at really a new layer, if you think about this, because this, to me, starts to set things up dramatically for basically a jet fuel within Ripple in general. And you look further into this. This is over on Ripple's website themselves. If you guys want to go read this was last week. And what they're talking about is XRP's utility. XRP's utility, they lead with that in terms of the TLDR across payments, liquidity, and credit markets. All three. Okay. And then institutional grade MPTs, and this is obviously permission domains. This is where we get into what really I think is going to be the bigger part of the opportunity around growth. And then live tools, credentials, token escrow, batch transaction. This is big institutional stuff, but needed for growth. And of course, the foundation all being built on the infrastructure and the backbone of XRP. So this could not be any better, but this all aligns with where Clarity is going. And back to what Chris Giancarlo was saying.
It's coming together perfectly because the Clarity Act will give the rules of the road for these banks and institutions to come pick a ledger. Yeah. And the XRP ledger is not going to be chosen unless we have permission domains, permission DEX, the ability to escrow tokens outside of XRP, multi-purpose tokens, on-chain lending, which are all amendments, some of them passed, some of them in the process of being passed. And at the rate that DC moves, they should be passed. Some people complain that the XRP ledger moves a little bit slow in this regard, but at least we're moving faster than DC. So I guess we can celebrate that. This ledger is going to be ready for institutional DeFi at scale. And the rest of the crypto market is really not pricing this in, doesn't even see it.
No,
It's, the same narratives that have been shouted by the FUDsters about XRP. Here we are in 2026, and they're still trying to say that XRP is centralized, a banker's coin, and they are completely missing this.
Yeah,
It's going to be a banker's chain in an institutional chain in regard to how many banks and institutions are going to come on chain with these amendments now getting passed, same time that Clarity is getting passed. Yes, it would have been nice to have these features a few years ago, but we wouldn't have brought banks and institutions on chain just because they don't have that clarity and the ability to come on chain up until now. And so I think that, you're highlighting what most people are missing in crypto.
Yeah.
And that's XRP DeFi exploding in 2026.
Well, and it goes all down to where the lending protocol yield is going to start to generate, and the idea around fixed term credit, because this is what institutional liquidity providers are really looking for in terms of, especially on XRPL. So, and you think about this is really the only other opportunity you have is repo markets or other DeFi protocols like Aave. That's it. So once this unlocks, and the fact that it's institutional grade, and the fact that you got all these great partnerships, to me, it just seems like a no-brainer for the selection for Wall Street. And that to me is the biggest issue for sure. Hey, let's talk about price for a second. I want to show you something. Institutional whales selling Bitcoin and buying XRP. Do you think you would have ever heard that before? I mean, we know that, but I think a lot of people that are watching our show, and I know I get all the hate from the Bitcoiners out there. I just love you guys even more when you do that. But this is an issue right now. Of course, we're starting to see outflows in the ETF side. XRP and a handful of others are basically benefiting from this. What do you think about this right now? Do you think this is going to continue?
We would have never seen this headline in the past 7 years that I've been in crypto, Paul. Yeah. You know it just as well as I do. We would have never seen this. In fact, I just saw, at the same time that we get one positive article, I think I just saw 5 others.
Yeah.
The other last week of people,
negative
trying to fight XRP.
Yeah.
Mm-hmm.
It's a constant. Yeah, it's a constant.
But the numbers don't lie though, Paul, especially on these ETFs.
No.
I mean, the outflows from Bitcoin, Ethereum were so clear, and the inflows into Solana and XRP were basically commanding the entire ETF market there for a bit.
Yep. Well, and I think the point being is that you've got a lot of very key players in the ETF side that I think has started to move this in. I'll share with you guys. I'm sure you're probably tracking this, but the XRP ETF tracker does a pretty good job on the leaders right now. There's Bitwise coming in at 3.37 million. You've got Franklin Templeton, number 2, Canaries holding on, Grayscale, Rex Osprey, 21 shares, I think, is going to be climbing up. But the point being is that we continue to see a climb in where this is going for XRP ETFs. And the likelihood is now, have you heard the rumors that that people are saying that BlackRock's looking to launch one of these?
Oh, yeah. Yeah. We've been talking about that one, haven't we? And it's only a matter, and that's the big unlock. That's the genie out of the bottle moment.
Yeah.
You can't put that one back in. It's just over. And we'll see XRP double when that happens.
I think so.
Yeah.
I mean, the opportunity there would just be the fact that, first of all, you have to remember that, and there's nothing wrong. Listen, these guys are top tier 1 asset managers, okay? Bitwise, Franklin, Canary, Grayscale, Rex, 21 shares. These guys are unbelievable. The difference is when you go into the pro level of BlackRock, remember that BlackRock is negotiating with the best of the best in the investors, okay? And it all boils down to who has the deepest book in terms of, hey, who can they pitch out to? These are billionaires, millionaires, and so on that are basically looking at buying and securing up digital assets. And BlackRock is usually one of the easy ways for them to do it. So to your point, a pretty big deal.
Well, and if I could just say, Paul, this past weekend, I always try to bring you the best alpha, Paul. I always lay it all out on your show. But I want folks to understand that 2 things can be possible at the same time, which is, 1, I have my buy orders placed. I'll just tell your audience and you right here, Paul, that I'm going to buy XRP between $1 and $1.10. I'll give you that range, right?
Okay.
If we get another pullback there, I'm a buyer, right? And we are so close to the bottom, right? When you look at every bottoming structure in the bear market of 2018, 2022, we're there. Are we going to go set one more low? Flip a coin.
Yeah.
And place your order somewhere in the range. And you're going to make money on the margin. You don't have to nail the bottom. And so I don't care if XRP briefly dips below $1 and I bought it and I was front running $1. I'm not going to care when XRP is going to $10 and beyond, right? And so we're buying XRP. It's so simple, just below its fundamental value. I'm ready for a short-term, finishing move in this bear market, capitulation. I believe that Iran strikes are going to be that final catalyst to smack our markets down one more time.
Yeah.
There's a couple other things it could be, but that looks to be the leading odds right now. Doesn't matter what it is, though. What matters is, where do you have your orders placed? Are you going to be able to scoop up relatively close to that bottom? And then are you going to be able to ride this thing back to $5 to $10, which is just a very conservative base case for the bull market on the other side of this? But people think that I'm talking out of both sides of my mouth when I say I'm expecting one more pullback to $1, and I'm also expecting XRP to go to $5 to $10. Now, that's how we position ourselves in these markets, right?
Well, you're always looking for those kind of adjustments in the market, for sure. And this last one, I think a lot of people are maybe saying, is that the last one? You feel like there might be one more, Zach?
Yep. And it'll come close to that level that we just hit or slightly below. Mm-hmm. So for anybody who's trying to figure out where to place your order, maybe you could play, I like to ladder in and ladder out.
Right.
So I'll place 3 orders. We just went down to $1.11.
Yep.
Maybe you're going to place one above that, place one below that, and then place a stink bid down at 90 cents if that makes you feel better and, you want to get lucky. You might. And that's why you do it that way, right? And you get as close as possible by averaging in, not trying to time it perfectly. But these bottoming structures typically will have that capitulation moment. We get that rally that fakes out people, brings back the sentiment. The volume looks very good. And we just got that last Friday, Saturday, with the market bounce back with strength. 30 million of inflows in one day on the centralized exchanges, 30 million of inflows on the XRP ETFs. So we got that rally, but typically that's a fake out before you go set one more low or double tap that bottom. And then that's it. And you're done.
Well, and I think the key here, to me, it definitely could be a gray swan event like Orion, but the one that I'm really intrigued with is a double tap. And what I mean by that is, do we get something on the global macro side, but also we get clarity? And what I mean by that is, do we get something on the global macro side, but also we get clarity? And even though it might be a slight loss on stablecoin yields, I think the bigger win is going to be DeFi and privacy in general, including self-custody, obviously. But I think Ripple will win dramatically. And I anticipate that if Clarity does go through this spring, we are going to see so many announcements coming up almost immediately after this from Ripple. So be on the lookout for some bounces on a lot of these tokens. Others that'll win is going to be HBAR. You may get some movement on Stellar. A lot of these utility products that I think are going to be playing big time. What do you think?
Well, once you understand how the market makers make their money, then it all makes sense. They're going to top out that market and bring it down faster than you can get out of.
Yeah.
And then they're going to bottom it out and then rally that sucker faster than you can get in, which is why you have to play on the margin. You can't try to play this perfectly. And, go look at the prices that whatever crypto you want to acquire or accumulate more of. Go look at where it just went to on February 5th.
Yep.
And ladder in with 3 orders, one above it, one right at it, and one right below it. And just wait for this market to finish out the bottoming structure, and do not try to get too greedy here. Because I see folks that are calling for 50-cent XRP. Bitcoin is going to zero. Not quite. And we have a long ways of support, big buy walls for XRP at $1, for Bitcoin at 50,000. And so I don't think that we're going much lower than the levels that we just went to on February 5th. Don't get too greedy here.
Yeah. Well, that's the point that I make all the time. Obviously, I've been looking. Anytime you see these kind of fall offs right here, it's tough to jump in on assets that are. This is the 4-hour chart right now on XRP, and many people were looking at that on, especially last Friday, where we started to see that waterfall effect on those 4-hour candles that literally pulled us down to $1.20. And that was a buy point for me. I had an order in there. I didn't know that it was going to ever hit that. I didn't think. And $1.20 you can pull in, and again, another dollar cost average. But to your point, getting in to anything below $1, if we even get back to $1, I think would be a pure gift of XRP and some of the other assets. Obviously I hold Ethereum, I hold some Solana that also saw this pullback that will continue to be a big issue going forward. But to your point, yes, there could be another one. Yes, that's just another opportunity. And I always love that when we get these kind of opportunities. What do you tell people about the long-term holding strategy? Because I feel like people just are not paying attention to that as much anymore.
Well, the one thing that everybody needs to remember is if you're not using leverage, then sit back, enjoy the show.
Yeah, just watch.
Either you can buy the dip or you can't. But either way, you should be able to sit back and enjoy everybody else who's using leverage freaking out. And I'm one of those. I'm in an XRP long that's down right now, right? I just be open and honest with folks on where I'm at. But you have to understand the psychology of somebody like me who's been in XRP for 7 years. I'm coming back to buy spot XRP at $1.
Yeah.
I haven't bought XRP spot in a couple years, since we were below 50 cents. And so that shows you the mentality of people that have been in XRP for a long time, and even for new people coming in. At $1, I'm taking US dollars and trading it for XRP and a few other good utility digital assets like you mentioned. But up until now, the last year or two, I've only been trading futures in XRP.
Yeah.
And that was to generate more dollars. But once we've gotten back to the levels that brings people back out and saying, yeah, I'm stuffing XRP in my wallet. Thank you very much. I'll take that $1 XRP. And so that to me is the level that will probably hold. The odds of us going below $1 are very unlikely. I'm not going to say it's impossible, but I am going to say that it's not going to last long. Because myself, you, and many others are going to be throwing as much fiat as we can afford to at these digital assets, at these bottom of the barrel prices. And if folks don't come in with a long-term mentality, they will lose. I had legendary investor Rick Rule on my show, and he explained out of all of the 10 baggers that he's had in his career, the average holding period was 5 to 6 years, and the average down the average down move was 40 to 50%.
Yeah.
People just hear, oh, I want to catch the next pump, bro. That's not how you're going to win in crypto.
No.
That's not how you're going to win in any investing market. right? So come in with a little bit longer duration, come in with a little bit more patience. And when you get these gifts from the market, don't get too greedy, don't get scared, focused on the fundamentals. And I'll tell you what I'm doing, which is throwing as much as I can afford to at these assets right now.
Well, the point being is that because I'm getting questions, we just had our wealth seminar this last week, and literally on Friday afternoon, while the market was just disintegrating, and the biggest questions was, crypto is falling where the rest of the market hasn't seen that kind of pullback, even though gold had a big, crazy day, both gold and silver. And my statement to a lot of the people that we had in the seminar were, listen, you're dealing with certain bear market indicators that always cycle through, whether you're in crypto or you're in any other asset class out there. But in crypto, it does have a more cyclical component. And if we are in a true bear market, which I believe we are, then this is the time when you start to see these assets get repressed down 40, 50, 60, 70%. If we see a pullback like on that, these are just opportunities, coming in.
Yeah.
So I think the key is you have to accept the fact that we are in a downtrend bear market, and you have to have the discipline to buy when everybody else is selling. It's just that's the problem that you have right now.
And take the learning lessons from the last year, but don't get too caught up in the negativity right now. Because I see some of the sentiment out there is more focused on trying to call out influencers for being wrong than focusing on what are you going to do with your money today, right? We were all wrong, by the way. I'll say I was wrong. Many people were wrong. Basically, if you were invested in crypto in 2025, you thought we were going to go higher than we did, right? We all got snubbed. Doesn't matter what you held. But this gift that the market is giving us now, if folks want to understand why this is happening, it's not because crypto's dead. We're still going through the ripple effects of the 1010 liquidation that started a collateral death spiral. So on 1010, we wiped out all of the leverage that was on perpetual futures, short-term traders, that we wiped out 19 billion of leverage that day, right? 19 billion of liquidations. But the pain didn't stop there. Because it brought us down to levels, and we stayed selling off to levels where big margin positions had to be sold off as well. And I have one example right here. Trend Research, Hong Kong-based crypto hedge fund, $750 million loss on an Ethereum long. And they had an average buy-in at about 3,300. They just sold off most of their bag between 2,300 and 2,000 for a total loss of $750 million. Now, not to beat up on Trend Research, because they're not the only ones, right? I'm in an XRP long that's in the red, but I have enough collateral and margin that I haven't been liquidated yet. That's not the case for many people, though. And we're talking about bigger fish in the pond than me. We're talking about these hedge funds that some are public, some are private. We're not going to know who all went bust, but we're starting to find out some of the players that did. That's why you just got this gift in the market. It's not because crypto's dead. It's an unwinding of leverage that's part of a bigger global margin call. And we're all up against it, whether you're just a regular retail investor or you're some of the biggest sophisticated hedge funds in the world. So that's why we're here.
And I think a lot of people, if whether you bought I don't think many of our viewers bought the top at 360 or so, but you're down 68% from that top, which was back in July of last year for the XRP side of things. If you start to go back though, and really look where I think most of our viewers are, which is probably in the 40 to 50 cent range, maybe even down as low as 30 on XRP. Then you look at also the scenario that has happened with Ethereum, which has kind of been in the same boat. It has had these kind of pullbacks that we haven't seen in a very long time. But remember though, Ethereum had a pull down that was considerably lower, so look at where Ethereum is right now. That's the one I'm a little bit more concerned with if that asset does start to take a heavy retracement. I think XRP has taken most of the brunt of this, mainly because I think institutional capital was involved in this. So they're the ones that are exposed.
Go look at the best performers after the Trump election victory and that preceding pump.
Yeah.
And that's your answer,
Mhm.
right? This is a shift. Institutional money's coming in. And yeah, Ethereum still could be revived, but there is some concerns there for me too.
Yeah.
But just be ready on the next uptrend to take those profits that you are going to have. Now, if I could just say this, Paul, for me, a $7 XRP is so easily done. And when you look at the silver chart, see, you got to zoom out, folks. Silver broke to $30 per ounce in 2020 and 2021. And then in September of 2022, it had the final pullback below $20 to a $17 silver. It then pumped 590% to over $100.
There you go.
That's where XRP's at right now. We've had a double top, 340 in January 2025, and then we had the 366 top in July of 2025. Now we are having that last final pullback where this is going to be your last opportunity to get XRP below $2 and maybe one more opportunity to get XRP at $1, which is just unbelievable, right?
It is crazy.
Before we do 600%, which takes us exactly from $1, 600% takes us to $7.
Yeah, $7. Yeah. Well, I'm looking at the silver chart. Look at that retracement. These are the kind of violent days that we're dealing with because, again, this liquidity issue that we are facing on the global market is starting to seep over even into the metal side of things. And obviously, many people have been playing on both silver, especially when you look at institutions, but playing on both the metals market and also with the digital asset side, which have been the most volatile, going
and
this,
hedge funds getting caught up in positions on gold and silver as well too.
Yeah.
Right. And just think, you got to be careful here because we had over 10 trillion of market cap wiped out between gold, silver, and crypto. This is without the stock market going into a bear market.
Yeah.
So I want folks to be careful here. If you're still in a traditional 60-40 portfolio, taking mediocre advice from a financial advisor who's still living in the past, just be careful. I'm not a financial advisor and I'm not going to tell you what to do, but I am going to urge caution because we had 10 trillion wiped out from our markets just from gold, silver, crypto. Imagine what happens if we go into a serious correction for the stock market too. Folks need to be ready to pivot if you haven't already.
Yeah. That's the point where I do think we will see some pivot into some other assets. And of course, the digital assets, I think, will be, most likely repressed in that zone as well, but it will be the opportunity on risk, especially as you look at the timing. Clarity coming into play, possibly Fed rates cuts coming into play. Now inflation may be at its lowest in forever. And if we see that correction and finally the job market starting to soften up a little bit to where it's a little bit more bearable, the only thing new you have to worry about is, back to your point, is those black swan events that could happen on a global side.
And did it matter if you bought silver at 30, 20, or if you're able to pick up the bottom at 17?
Yeah.
As we now sit at $80 even after the correction,
you're
still well into the profit. And to me, you compare it XRP at $3, $2, and now $1. This is the equivalent of being able to pick up silver at $10 before it went to $100.
Yeah, $100. Yeah, for sure. Well, you guys know what to do here. By the way, if you're not following Zach out there on YouTube, make sure and do that. You guys, of course, can visit his YouTube channel. We'll leave a link down below on that. Where this puts us in the next few weeks or months is going to be in a very intriguing spot. We will have Zach back to talk about that, especially as we near clarity, because I think this starts to change things up for Ripple in a big way. There'll be a lot of news. Zach, so thanks for coming in today. I appreciate it.
Always a pleasure, Paul. Thank you very much.
You bet. You guys know what to do. If you are not subscribed and hitting a like on this episode, well, I don't know what you're doing, so do that. We are the top-rated podcast I just got the news this morning, top-rated podcasts in news and finance, again, on this show right here for the month of January. So kudos to all you guys who have been a part of that, because this is the reason that we do this work every day. We will catch you guys later right here on the XRP Podcast. Take care.